Good morning. Let's break down how you might approach calculating the minimum daily profit for your Nasdaq Crypto Index option and Dow Jones option Albatross spread strategy in the U.S. market, keeping brokerage fees and taxes in mind. It's important to understand that predicting a minimum daily profit in trading is inherently challenging due to market volatility. However, we can outline a framework for how to estimate potential profitability and factor in costs. Here's a detailed explanation. 1. Understanding the Albatross spread strategy. An Albatross spread is a four-legged option strategy that can be constructed in a few ways, often involving four options, contracts with the same expiration date but different strike prices. It's typically used when a trader has a specific directional view on the underlying asset but wants to limit both potential profits and losses. For example, a long call Albatross spread might involve buying one lower strike call option, selling two middle strike call options, buying one higher strike call option. The specific profit and loss profile depends heavily on the strike prices chosen and the net premium paid or received when establishing the trade. 2. Calculating potential profit zones. To determine potential profit, you need to analyze the payoff diagram of your specific Albatross spread for both the Nasdaq Crypto Index option and the Dow Jones option. This involves identifying the break-even points. These are the underlying asset prices at expiration, where your net profit or loss is zero. For an Albatross spread, there can be multiple break-even points. Determining the maximum profit potential. This is the highest profit you can achieve if the underlying asset price lands within a specific range at expiration. Understanding the maximum loss potential. This is the largest amount you can lose if the underlying asset price moves significantly outside your expected range. 3. Estimating daily profit. Estimating a daily profit from a strategy designed for expiration requires a different approach. You'd likely be looking at mark-to-market gains. The change in the overall value of your options positions each day due to factors like changes in the underlying asset price, volatility, vega, time decay, theta, interest rates, rho, and the Greeks. Trading out of positions. Early. You might not hold the options until expiration. Instead, you could aim to close out your positions for a profit before expiry. To estimate a minimum daily profit, you would need to analyze historical price action and volatility. Look at past data for both the Nasdaq Crypto Index and the Dow Jones to understand typical daily price movements and volatility. Simulate scenarios. Model how your specific Albatross spread might perform under different daily price fluctuations and volatility changes. Consider probability. Assign probabilities to different price movements to get a sense of the likelihood of achieving a certain daily profit. Important note: it's extremely difficult to guarantee a minimum daily profit with any option strategy due to the inherent unpredictability of the market. Your goal should be to have a strategy with a positive expected daily profit, considering both potential gains and losses. 4. Factoring in brokerage fees. Brokerage fees can significantly impact your profitability, especially with multi-leg options strategies like the Albatross spread, which involve multiple contracts. You need to consider per-contract fees. Many brokers charge a fee for each option contract traded, both to open and to close. For a four-legged spread, this means you'll incur these fees 4 times when opening and 4 times when closing. Commission structures. Understand your broker's commission structure. Some may have tiered pricing based on volume. Other potential fees. Be aware of any other potential fees, such as assignment fees if options are exercised. Example calculation. Illustrative and simplified. Let's say for one Albatross spread on one underlying asset, your brokerage charges $0.50 per contract per leg. Opening cost for contracts $0.50 contract equals $2. Closing cost 4 contracts, $0.50 sale, contract equals $2. Total brokerage per trade, $4,000. To achieve a minimum daily profit after brokerage, your mark-to-market gains or your profit from closing the trade early would need to exceed these fees, plus your target minimum profit. If you are trading multiple spreads on both the Nasdaq Crypto Index and the Dow Jones, these fees will multiply. 5. Factoring in taxes. Tax implications for options trading in the U.S. can be complex and depend on factors like holding period. Short-term gains, held for 1 year or less, are typically taxed at your ordinary income tax rate, while long-term gains, held for more than 1 year, are taxed at lower capital gains rates. Type of asset. The underlying asset, crypto index versus stock index, might have different tax treatments in some situations. Wash sale rule. This rule can prevent you from claiming a loss if you buy a substantially identical security within 30 days before or after selling it at a loss. State taxes. Don't forget to consider any applicable state income taxes. To estimate your minimum daily profit after taxes, you would need to estimate your tax bracket, understand your federal and state income tax rates, consider holding periods, determine if you are likely to realize short-term or long-term gains, factor in potential losses, understand how losses can offset gains for tax purposes. Example, illustrative and simplified. Let's say you aim for a $10 daily profit before taxes and brokerage for one spread. Brokerage, $4, as calculated above. Pre-tax and pre-brokerage. Target, $10. Required gross profit, $2 plus $4,000 is the $14. Now, if you are in a 25% tax bracket for short-term gains, estimated tax, $10. 0.25 equals at 2,050 yens. Net profit after tax. If you achieve $10 pre-tax, $2.50 says go $7.50. Net profit after tax and brokerage, $7.50 says. Oreos equals $3.50. To achieve a minimum daily profit after brokerage and taxes, you would need to set a much higher gross profit target to account for these costs and the inherent uncertainty of the market. Key considerations and steps. 1. Detailed strategy definition. Clearly define the specific strike prices and expiration dates for your Albatross spreads on both the Nasdaq Crypto Index option and the Dow Jones option. 2. Payoff diagram analysis. Create or use tools to visualize the potential profit and loss profiles of your chosen spreads. 3. Historical data analysis. Study the historical price action and volatility of both underlying assets. 4. Simulation and backtesting. If possible, simulate how your strategy would have performed historically, factoring in realistic daily price movements and volatility. 5. Brokerage fee assessment. Get a clear understanding of all the fees your broker charges for options trading. 6. Tax planning. Consult with a tax professional to understand the tax implications of your options trading strategy. 7. Risk management. Implement robust risk management practices, including setting stop-loss levels, though these can be tricky with multi-leg spreads, and managing your position sizes. 8. Realistic expectations. Understand that guaranteeing a minimum daily profit in options trading is not feasible. Focus on strategies with a positive expected value over the long run. 9. Trading journal. Keep a detailed record of your trades to analyze performance and refine your strategy. In conclusion, determining a minimum daily profit for your strategy requires a thorough understanding of the payoff profile, careful estimation of potential daily movements, and accurate accounting for brokerage fees and taxes. Due to market volatility, aiming for a guaranteed minimum daily profit is unrealistic. Instead, Focus on developing a well-researched strategy with a positive expected return and diligently managing your costs and risks. Remember that options trading involves significant risk and is not suitable for all investors. Past performance is not indicative of future results. It's crucial to do your own thorough research and understand the risks involved before trading. Please like, subscribe, share, and comment.